In 2014, Nigeria didn't just use cash, Nigeria was cash. It was the physical weight of a backpack required just to buy a used car. For 170 million people, the big banks were fortresses, cold, intimidating, and built for the elite. Outside those marble walls, an economy was beating that the global financial system couldn't see, couldn't tax, and couldn't help. This is the shadow economy. Nearly 85% of all Naira never touched a bank vault. And it wasn't just happening in the markets of Lagos. Down south, in Port Harcourt and the oil-rich hub of River State, millions of dollars in the unofficial oil and maritime economy flowed entirely in paper. It was a massive, untraceable ocean of liquidity. If you weren't in a bank, you had no credit score. You didn't exist. When the central bank looked at this map, they saw a ticking time bomb. Inflation was a ghost they couldn't catch because they didn't know where the money was. In June 2014, the CBN issued a mandate creating a regulatory sandbox. It was a financial laboratory.
Nigeria, as a big country, the biggest economy in Africa, that we need to leapfrog into the cashless economy. We cannot continue to allow a situation where over 85% of the cash that is in circulation is outside the banks.
Giving tech startups a hall pass to test digital wallets without a $50 million banking license. The traditional banks felt safe behind their walls. They didn't realize the regulators had just handed the keys to the city to a group of coders with nothing to lose. To understand the revolution, we have to look at the code. In the early 2010s, if you dialed a USSD code like *737# on a feature phone, you had exactly 2 minutes before the telecom network timed out. On a crowded Friday in Onitsha or Port Harcourt, 2 minutes is an eternity. A USSD packet is fragile. Traditional bank servers were dropping up to 40% of these requests during peak hours. The banks tried to force the streets onto a fiber optic schedule.
Michael, I am 36 years old and I was born in Lagos, Nigeria, but I grew up in Ibadan, Nigeria.
Tosin and Yolanda realized you couldn't fix the server, you had to fix the machine. MoneyPoint built a POS terminal that didn't just accept cards, it acted as an offline queue. If the 2G network dropped, the machine held the transaction, pinging the network every microsecond until it caught a sliver of data and shoved the transaction through. They didn't just sell software, they built a branch in a box. By empowering the local shopkeeper to become an agent, they turned every street corner into a bank vault. They conquered the last mile not with high-speed internet, but with relentless, fault-tolerant engineering. While MoneyPoint was digging the trenches, the East was watching. Backed by Yahoo Yazao's Opera Group and SoftBank, OPay entered the market with a staggering $570 million war chest. This was Silicon Valley-style blitzscaling. They didn't just want market share, they wanted a monopoly. OPay launched O-Ride, subsidizing motorcycle taxis to force users to download their wallet. PalmPay leveraged Transient Holdings, the makers of Tecno and Infinix, to pre-install their app on 48% of smartphones sold in Africa. Before a student even unboxed their phone, the bank was already there. Traditional banks watched in horror as their deposits bled into these digital wallets, 100 Naira transfer at a time.
This is how my life is going to be like. Because one, I could not pay my rent, I could not pay my children's school fees.
For Olanrewu Shabayo, the economy wasn't a chart, it was a cage. He lost his job, his car, and his ability to pay his children's school fees. He found a lifeline in the very infrastructure MoneyPoint built, becoming a business relationship manager.
My name is Olanrewu Shabayo. Presently, I work with MoneyPoint as one of the BRM business relationship manager.
He wasn't just a number, he was the man bringing the bank to the forgotten.
450,000, all in the name I got a POS, and yet a lot of frauds are
Mrs. Chinway, an aluminum trader, cash was a liability. Fake notes and theft cost her 150,000 naira a month. Traditional banks told her to wait 2 weeks for a corporate account. She didn't have 2 weeks. The POS guys gave her real-time SMS alerts and instant confirmation. The unbanked were no longer surviving, they were scaling. February 2023, the Great Naira redesign drained old physical notes from the system, but the new ones never arrived. 200 million people tried to squeeze through a digital door that wasn't wide enough. The Tier 1 bank apps buckled. Transactions hung in the air. The Fintechs, optimized for the cloud and 2G, stayed afloat. They became the national switch by accident. But the POS army wasn't entirely benevolent. In the desperation of the cash scarcity, human nature took over. Some agents became local cartels. A 10,000 naira withdrawal suddenly carried a 3,000 naira fee. The decentralized infrastructure that was supposed to save the streets was now taxing them heavily. It was a brutal lesson. When you remove the traditional bank, you don't remove greed. By late 2023, the big banks realized they were losing the kingdom. In a coordinated blockade, several legacy banks unilaterally removed the major fintechs from their transfer networks, citing fraud concerns. Customer funds were trapped. The sandbox had become a battlefield. Growth without oversight is a wildfire. In April 2024, the CBN dropped a 1 billion naira fine on the fintech giants for KYC lapses. The government wanted every kobo tagged to a face and a fingerprint. For 3 months, the startups were forbidding from signing up new customers. The Wild West was officially over. January 2026, the CBN issues a formal upgrade. The rebels are now officially of the digital transaction, a new Africa has been born.